It bounced right off of GP on Friday or Saturday.
Damn, it did. Holy shit.
This is what we broke down from that 110. That 110 test from last week, right? So it was Thursday. Then Friday we got the breakdown. So that was not bad, but then we bounced
Yeah.
right into that bottom range GP, right where we said we kind of wanted it to. Well, I mean, not that I wanted it to bounce, but those were the targets. But the
Yeah.
problem is if they don't start rolling back over, they're gonna potentially squeeze. And I don't care because I'm not really trading Bitcoin right now. Just theoretically, I wanted to see Bitcoin get under 100, and
Yeah.
the rest of the market go down with it. But we'll see
Follow.
what's up this week. Maybe it was just a little bounce to roll over this week, because that week does look a little nutty. Not gonna lie.
Just gotta retest the bottom first, I'd say, before heading back up.
Liquidity
But
on that ain't crazy, but yeah, I would want to see that for sure. Yeah, maybe that 1 minute. We'll see what's up. Cause like this was liquidity, but then they swept it and bounced, so pretty clean shift. Not gonna lie.
yeah.
The only thing I'm scared about, bro, is gold TBH. Cause it's like, all right, if Bitcoin starts rallying and gold goes for another leg, GG's.
Uh, from where it fell to. Fuck.
It has room. Okay, I didn't take, bro. Like my swings. Well, you have a swing too, no?
Yeah, I just got the 31st.
Yeah, I didn't touch 31st or November's. So I'm like, fuck it. Hopefully we get the breakdown from here. But realistically, bro, this is a fat ass range.
Yeah. They can reclaim that on the upside.
Not even reclaim. Even if we were to do a simple retest of the 796 or a 618, we're giving up a bit of
A
range.
lot of premium. Yeah.
Yeah, some type of. Why are my arrows this color?
I might just get contracts within like closer dated, but like more aggressive, I guess.
What do
But
you
we'll
mean?
see. We'll see. Like
Like a
what
shorter
contracts?
dated?
Yeah, shorter
I
dated,
think for
and
gold
like more closer in the
specifically,
money.
from when I was doing my research over here, obviously time is always going to be better. But those October 31st really stuck out for some reason. One
Yeah.
on the volume to open interest, on the pricing. There were a couple different things that really stuck out on the 10/31st. I don't know if it's still there. Let's see. But yeah, the 10/31st. I'm telling you, I have a lot of money on November 21st too. Those obviously you're clean. They have a whole month more basically. But the
Yeah.
31 like just straight up stuck out on the chain. Let's see. Oops.
See, what did I even get?
Oh, I hate this. It doesn't even show. Oh, can I edit this? I already have everything ticked. Doesn't show up in interest, which is kind of whack. I mean, I'm pretty sure if I click on them. Honestly, I kind of like the interface for options. I kind of don't.
Mixed feelings. Yeah.
It just shows volume. It's kind of whack. Whatever, it's
Yeah. I
fine.
got.
Let's take a look at these 390s.
I got the 380s.
380, 385, 390s, they're all clean. Bro, I'm surprised this doesn't show. I thought it showed open interest on here.
uh. Hmm.
I don't know where I thought I had seen it before. I guess I'm confused. That's fine. I'll look at the 380 since you have the 380s. I'm telling you, 380s, 385s, 390s, they all look pretty good. Yeah, it doesn't show. Whatever. Look at the volume though.
Yeah.
And then IV started coming up a little bit because let's
Because
see.
the drop.
Yeah. Just don't like how the action looks. Regardless, let's just focus these last 3 days. Oh, this is Thursday, so these last 2 days. Wait, what the fuck? Oh, this was last Thursday.
Damn. That's pretty pricey for. I mean, it did
Yes and
rally,
no.
so it kind of makes sense.
So like I'll focus it off this high. So based off of last week's highs, on the premium, you could potentially see these
Yeah.
targets, right? Let's overlay GLD on this. Matter of fact, I kind of want to do it backwards. Have nah, it's fine, whatever. You can see those gaps so clear on here.
Right.
Okay, so we are currently up here on gold, right? You got one gap here. Why is it not? Whatever.
That's one. Number two done there.
Another one over here.
Yep. Lines up with the fibs too.
And then you got this one right here. So basically, let's say we fill this gap right here. We fill this gap right here, which would be into 360. That's more than this, realistically, but that would be clean. Where's my marker? Ideally, let's say, I'll go in white. Ideally, let's say we lose this level, right? Into next week. You're gonna have your next sell gap into here. If we lose that level, you have your next sell gap into here. And at that point, realistically, these would be into that 786, if not higher. I would say higher. Simply because look at the strike. Again, assuming they come into this level right here, you're gonna be trading, you're talking 363 to 357 or 358. Even not to get so low, just 363 to 360. If they trade into 363, 360, you're talking about the contracts being $20 in the money. From here
Yeah, deep in there.
to here, that's 2K.
Yeah.
You're talking about 1.4, 1.6 on the pricing at the 786. So realistically, I think this can definitely happen on these contracts, on these next 2 weeks, assuming gold fills those gaps to the downside.
Word.
And I'm telling you, they all look pretty good. Whether you got November's, 390s, 385s, everything looks clean. But for some reason, specifically October 31st just stuck out. And honestly, if anything's gonna happen with China with everything going on right now, it's gonna happen these next 2 weeks. Like this week, Trump's meeting Putin. Let's see. Alright, so this is GJ. I'm gonna clean it up a little bit just because it's messy, but for the most part, we kind of got this drop we wanted. Ideally, we want to see it stay below this. What is this? Oh, below the 618. It could go retest the 786, but I don't want to see that. I want to see a flip below 618 here. Just a problem with everything for the most part, whether it's GJ, SPX. The only one that doesn't have a problem is Bitcoin because it's trading, and I mean problem in the sense that we could gap up or down. Just kind of depends to see how we open today. I had just covered Bitcoin. I'll do it again because you guys just came in, but we bounced off of the bottom. Whoops, we bounced off of the bottom GP, right? So this was a bottom zone where we kind of wanted to see it go. Now at this point is you know, the test where I want to see, does it reject where we this was south side liquidity, right? So we filled it, fell below it. Now I don't think it'll go that high. If it were, this is the area I want to see it reject from, right? But again, it doesn't have to go that high. It could revert from anywhere lower. Keep in mind, we were tracking it from back here last week. We mentioned we wanted to see a break up below 110K. We got the break below 110K, and then we came all the way into here. Now, realistically, I would want to see it roll over and give us the test below 100K, or the 100K test. And then once that test fails, you know, obviously trade below 100. And if the 1618 and a couple other levels are lost, these targets might still be coming into play. I'm gonna go ahead and just move this over so it's the same exact target, just you know, the timing was a bit off. And I just drew that arrow. This chart is from months and months ago. I think it was before August. You know, but we're still in October. Technically, that those targets can still come into play, assuming they were to. And again, like I said, I drew this in August, you know, mid-August or whatever it was. So 82K by October, still in October, and this may still come to fruition. So not perfect, obviously. But we got the drop, some type of a bounce into here, drop, some type of bounce, obviously squeezing a little higher than what I had, but that's fine. So next part from here, which you want to see, would be this leg, right? The break of 100K we just discussed. I don't want to focus too much on individual names, just because, like I said, we could gap up or down. I'd rather let things play out and then see where that goes. But while I do have U3 here, I'm gonna do a quick what I said I would teach you guys, just because I think that's more important than guessing where we may or may not, you know, open up in a couple hours. Rather just wait and see.
Yeah.
All right, realistically, I could do it on any pair. I was gonna do it for gold just because I think we've been kind of focused on gold. So would you guys want to learn the lesson for the projections on gold, or would you guys rather do it on something else like SPY or something?
Which one looks cleaner right now?
I think gold, honestly.
I'll do it with that.
All right, go for it. What did I put? All right, so I'm gonna completely get rid of all this. All right, so blank chart.
Pajama.
What happened?
That young pajama fits. Let's get it.
So there's nothing, right? Plain chart. Just a couple different. Leave it up, whatever. All right, so plain chart. Obviously, you kind of have to have an idea of where the markets are headed. I'm not just gonna randomly just do this at any point in the market, but since I am, you know, kind of thinking this is gonna be a potential top on gold, one thing you can do is look at previous history on gold for potential. Look at a previous rejection on gold, basically, to give you an idea of you know, what those moves can look like, right? So zoom out on the chart. Obviously, no retracements here, no retracements, nothing here. This one was a small one, but I'm looking for like something substantial, which I can't do here. Let's go on a monthly. All right, so this one was decent. This was 2012 pullback. This one was decent. This was the COVID one, 2020. This is probably the most decent pullback as of late that I can see on the chart, right? The one we had here. Other than that, like I said, the one we had in 2012, but that data is a little too, not that it's outdated, because this was still, excuse me, this would still be a good example, but I'm just gonna focus this. But you know what? I'll do this one just because it doesn't. It still works, or it should. Let's see. So all I'm doing here is basically marking the high, so I could go reference it on the daily right now. If the daily data even goes that far back, let's find out. Nope, it doesn't. Oh yeah, it does. It does. I passed it. Here it is. All right, so I'm gonna just. I had not looked at this myself. So for the most part, you had that big squeeze in 2011. Then we kind of slid for a few years, but ultimately, continued to head lower. So I'm gonna copy two paths from here just to give you guys an example of how this could, work out. Oof, this would not be nice. We'll see. I don't know if it's gonna work out with the scaling. Let's see. So this would be one. And then I would want to copy this one. And again, I don't know how well this is going to look because of the scaling. Might not work too well. Let's see. Yeah, definitely not going to work. It just... Let's see though. Yeah, that was a waste of time. Didn't work too well because of the scaling, which I assumed, but whatever. That's crazy though. That entire move that we did in back then looks so tiny now. All right, just forget this for now. All right, so what you would do is one, you're gonna look at essentially one, you need to have a range you're gonna want to measure. So all you're doing with what I'm gonna teach you guys, it's giving you a measurement, so at the end of the day, you could grab a ruler. You're not gonna say, oh, the ruler is wrong. It's a measurement. There's your trade within the measurement might be wrong, but the measurement itself is not wrong, right? So again, all you're doing is taking a measurement. What do you want to measure? Well, that's up to you. There's a couple different things you can try to measure. On gold, for example, one, I can try to capture this entire range, which is realistically not my focus. I'm focused on these two previous monthly candles. Even one would be, nice. Realistically, if we get back into 360 or lower, that'd be great. So like I said, realistically, I'm focused on these two monthly candles, but even 360 would be great. So if you wanted to focus on a bigger move, like if you wanted to do a bigger projection, because I have done that in the past. So if you want a larger projection, going, for the most part, the time frame you look at is going to be your projection. If I'm doing this based off of a daily, a 45, a 3 hour, something smaller, which I don't really like to do. I like doing it based off the higher time frames. But like I said, if you wanted to do it, you could. You'll get projections and targets for smaller targets, kind of like you guys see me do in real time, when we're trading the markets. But again, not the biggest fan of that. If you want to do a huge range like this, you could. But for this example, I'm gonna focus just this 2 month range. So again, it's the same exact thing, whether you want to focus a yearly range, a 2-year range, this entire range, a 1 day, a 45-minute range, exact same thing. Just again, you apply it to whatever time frame you want to look at. So for this exact example, again, I'm gonna focus on this 2-month range. So you would have your bottom range, which I'm going to use as from this previous month. And then from this previous monthly high, we, squeezed all the way up here, right? So these are my values. I'm going to go ahead and go back to daily. All right, so this is your range. The base at 0, and I'll put the one. I usually don't like seeing it, but and your full extension up here. This also happens to be the area they broke out from, right? So they had been consolidating here for a few months, broke out, did that leg higher. Whoops. In the same sense, if they were, or when, because I think they will, when they give up this zone that we had been consolidating in for so long, one, we have GP here, which you guys already know what happens into GP if you've been paying attention. We should try to see a bounce. If they hold it, great. But theoretically, even if they were to bounce, we could still roll over from higher. And then if they don't bounce, we could just go straight lower. But there are much lower targets on gold realistically. The 1618 is into 190, which would be a pretty steep haircut from where we are right now. About a 50% haircut into the 190 where we were trading at just about a year ago, February 2024-ish. So we'll see how things unfold. But again, this might be a pretty interesting trade. So let's get back to the current conversation. So we have the range set up, right? Hold on, give me 1 second. I'll drink some. Bro, my throat is so dry.
Crazy ASMR.
Huh? You could hear that shit?
Yeah.
No, I should have muted myself. All right, so there's the range, right? So far, you guys understand the range, how I got the range, why I put the range there. So again, I'm targeting this previous 2-month range, which is why I put it there. If you want to focus on a yearly range, you want to focus on a daily, up to you. But you guys understand that part, right? So pick the time frame you want to target, and then set your range with the fibs. And then if you guys don't have the fib levels that I use, or the regular presets or whatever, let me know. But again, that's pretty straightforward, this part, right? You guys got that. The next part you're going to want to do is get the timing. What do I mean by the timing is, how much time did this move take? So you could do one thing, which is simply go to the move and then go to here. How many days was that? 49 days. Okay. What I like to use is this tool here, which is the GAM box. It's not supposed to look like this. So let's see. Should I reset it? I'll reset it, whatever. So this is what it looks like by default, which I don't use it like this. So once you modify these settings, right, you can get, is that the one? Nope, that is not the one. So this one is one that I did for a combination of both time and price, which you theoretically could do. Since I already have it up, I'll show you. Like I said, you could get creative. It's just up to you how you use your tools. All of these are tools at your discretion. And all these little tricks you guys see here is just stuff I've done, messing around on the chart. So for this specific template, you're doing both fibs and time extensions in the same one if you wanted to, which realistically, I guess you could. And I'll just show you guys with it. But if not, you could use just the time extension as well. So for example, from here, I'll place the start here. Then your end is gonna be into the highs, right? Where are, oh, you can't even see them, they're down here. Gotta change the color. But basically, you have your time extension. So we start here. This time is not right, time ends here. So time starts here at 0. Whoops. Why does this not look right? Hold on. Oh yeah. So time starts here at 0. And then ends here at 1. Right? So now you have your time extensions and your price retracements. So extension time, there's a couple of different things to look at. It's going to be the same exact thing when I show you guys the regular layout. You're going to look at the 1. The 1 is basically the full extension, right? 0 to 1 is a full extension. From that 1, you want to see the 1.5 is pretty important, but realistically, I don't really look at anything here. I start looking at positions into the 2.5 and into the 4. So for the most part, let's say at 2.5, you could consider trimming partials, because realistically into the 2.5, you'll be hitting major targets. And then from that spot, you know, you might get a little relief bounce, and then you might lower come into 4. 4, you might not always hit those targets, right? So even though that time is always going to come, because the time is always going to pass, the whatever targets you have into these areas don't always come. So realistically, like I said, into 2.5, wherever we're trading on the charts, you're going to want to consider taking some profits. So what would that look like? 1, these targets are a lot lower than mine. We just discussed 190. This is 186. So 188-ish. So that kind of lines up with what we had just discussed. And again, this is based just off of that 2-month move we had right now with the Fibonacci's. And that 4 is going to be into January 2014, which is why I'm telling you guys, if you grab time right now for the next 3 months into January, you're going to be positioned pretty well. If you look at the 2.5, this is December 1st. If you look at
so this tool pretty much helps you find the strike, the
expirations.
dates that the expiration dates. Oh
Yep,
shit!
you already. We already kind of have targets, right? So the targets are kind of based off of what we just went over with the sell gaps and all that. This is literally going to give you your dates. So if you're saying, okay, well, if I'm gonna trade here, here, you know, whatever the case may be,
that's pretty handy.
all right, well then where am I gonna be at? Okay, well by Friday, October 31st, I could be trading between the range of 365 and the range of 350, 355, let's say, right? So I know what strikes to buy, right, between this range if I want to be in the money, and what expiration. So what I like to do is, okay, well, if I need to be at 365 or 355 by October 31st, one, you could do that, but I'm not going to buy this. That's why I have the 390s, 380s, 385s, all that. If we get here by the 31st or lower, like I said, your contracts are going to be 2K in the money or more. And you have your date for expiration, the 31st. And then we have the second layer for mid-November, right? I said the 21st. We could have gotten here, right? The 14, I told you guys, get the 21st. The 21st allows you for this, right? And then the next batch is into mid-December. So if you got mid-December, it allows you for this. And then if you get January, it allows you for this.
I see.
And you get your dates all off these projections. Literally, all I did was go point A, point B, and you get your price extensions. Sorry, not your price, your time extensions, and your price. Which, let's see if I could change these. I don't like these. Can I use? Yes, I can.
I like how it's all measured projections.
Yeah, it's super clean, bro. But I kind of want something more conservative. Let's do. My bad, I'm blanking out on how to. And you guys are literally seeing me do this live. I don't even use this tool. I'm just kind of tweaking it right now to see how we can try to use it. I can do the 0.5. And like I said, there's so many different tools on here that even myself, I have not used. It's just a matter of devoting time to the app. But there's so much stuff on here, honestly. All right, I got the 382. Why is it 382 not showing up? Oh yeah, it is. I think that's fine. So I moved the targets a little bit. Not a little bit, a lot. They were very overextended, but basing it off of this range here. Now you have your 382, which is going to be into 375. Your 0.5, which is your midpoint of this 2-month move, is going to be into 368. The 618 into 361, and the 786 and 351, which is, you know, roughly those gaps. Not roughly, literally. So again, you have one gap here. And then other one here, and they all line up with those fibs. So, and again, all this is done with just one tool, the time and the price. If you wanted to keep it separate, which I like to do just because I think it's a little neater, you could do so, but if not, you could tweak it and have both in one. That is not the one. I think it's this one. Time times price. And then the other one has both. Nope. I guess it's that one. My bad, I don't use this one too often, but it does give you those dates, like I said. So you could tweak it so it's just the extensions, or you could have 2-in-1. But regardless, the main focus on this is knowing to get those dates. And it's not like I'm just, oh, you know, I like this specific date because it gives you time. No, like, it's not like I'm just randomly picking dates. As you guys are seeing here on the chart, every specific strike and expiration is picked based off of what I'm seeing here on the chart. And it's not like I come up with these levels. These are calculated based off of those fibs. So again, you can't say the ruler is broken. A ruler is simply a ruler. These are simply measurements. You trade based off of those measurements. If for whatever reason, we start bouncing off of levels, then that's when you align and readjust your targets, projections, and all that. But assuming you're following according to plan, projections, everything, you pretty much have your cheat sheet, because you kind of know where to trim, where to get in, where to get out, where you could bounce, what dates, and all that. But catch you, broski. Does that make sense to you guys? Do you have any questions so far, kind of what I've discussed?
It makes sense.
And then, do you know how to do it? Do you want to try doing it on your chart? Do you want me to explain how to do it? So again, if you come to, let's go to a blank area. If you open this tool, so again, by default, this is what you get. And again, all this is your time axis. And this is your price axis, right? So you could use it both ways. One, as time passes, and two, either as price extends or retraces, depending which way you go about the fibs. And again, I don't like it like this. Not that there's anything wrong with it. You could have it, not even because of the colors, which I don't really, like. But I just like having the specific time, because again, that's what I use this tool for. Just time. If I want to do fibs, I'll get my fib tool and do specifically fibs. If I want time, I'll do specifically time. But again, it's up to you what you guys want to do. If you want to have that 2-in-1 option I discussed, all you would really want to do is, one, the colors you could set to whatever you would like. The time levels you would not tweak. You would leave these standard, 1, 0, 1, 1.5. All that is going to be standard. And you could use theoretically Fibonacci's for this. So for example, instead of using the 1.5, you could use something like the 1618. But me personally, I think for price, Fibonacci's are a little better because you get exact prices. But as far as time extensions, I think the 1.5s, the 2s, the 2.5s give you better measurements. For example, in this small tweak, the 1.5, from 1.5 to 1618, we're currently at August 4th. If I go back to 1.5, you are at July 25th. So it's a decent discrepancy. Like I said, you can use fibs if you really wanted to, but I would probably just leave these as is. For these, yes, you're going to use fibs. Even here though, if you wanted to use if you didn't want to use fibs and you wanted to focus on standard deviations, which is why I said in the comment in the Discord, we're going to focus on standard deviations and fibs. They both work. At the end of the day, it's the same theory. All you're looking for is retracements and extensions in price. Whether you're using a Fibonacci to, calculate that retracement and extension, or standard deviation, they are both valid. So for standard deviation, you could do a 0.5 standard deviation. You could do a 1.5, a 2.5, whatever the case may be. So these same values you were using down here, you could use as opposed to fibs. So instead of looking like at a 4618, you could just look at a standard deviation. And again, it's not that one works better than the other. It's personal preference. But for me, for when I'm looking at price, I like fibs. When I'm looking at time extensions, I prefer those standard deviations. But again, both are valid in both of these options. Just preference, I guess. And
But
again, if
you use you use them separately, yeah. So you draw Fibonacci for levels, and this one you use only the time option.
yes, but I'm trying to
Okay.
show you guys, you could use this one
Yeah,
tool
yeah,
for
I understand.
both if you wanted to. And
Okay.
that's, kind of where these values come in. And like I said, even regardless of this tool, when you're looking for levels, like I said, some really good traders I know myself, they don't do Fibonacci's. They don't believe in Fibonacci's. They focus solely standard deviations, which is going to be 1 standard deviation, 1.5, these values. And like I said, it's personal preference. I can't say it doesn't work because those guys are, one of them, like he's doing a lot better than me. So I can't say it doesn't work. But just trust me, personal preferences are both valid. This is just what I like. And then if you guys want those values, again, they should already be in there. If not, you could tweak them yourself. And then the colors and all that, it's up to you. If you want me to do another 2-3 examples on this, so you guys could kind of see
Yeah,
it better, I'll do. Do you want me to do?
yeah.
What do you want to see it on?
I don't know. We can do SPY, yeah, because it's continuous.
Spy.
Because what I will need to understand exactly is where do you start and stop? Yeah. So basically, if I
You
understand
pick your
correctly,
points.
you pick your points, but
Yes.
the way you use it is you use the minimum and maximum in that
In
period.
whatever range you're targeting. So if I'm looking at a daily range to target a trade, then I would focus that. If I'm looking for, a monthly range, then it's kind of depending on whatever you're looking for on your trade. Like if I'm looking for a 0DT trade, I'm not going to be looking at, a contract with 3 months time. So it just kind
but
of,
I don't understand. I don't understand how you use this time for 0DT for less than 1 day. What would be
it's the
the
same thing. You were here on Friday, yes? I'm assuming.
Yes, yes.
You saw the AMD trade in real time.
Yeah.
Okay, I did not put the price. What I'm showing you right now, these examples, I did not draw it here, right? I just sketched this by hand, right? If you were to get the low, right, to the
Okay.
high, so 0, low, 1, high, where is the low of the day? Let me change the color on this so you can see it a little better. Where's the low of the day? After the wick fill, obviously, which we were targeting, but my point is the time. Do you see how it happened? 1, almost right into the 4, but after the 2.5.
Oh, okay, understand.
And I'm also mentioned at the 2.5, you can potentially take some profits. Let's say you took a full stake up here when I mentioned it in AMD. At this point, into the 2.5, right? You're pretty green. Not as green as you were down here, but I think at this point they were at least hitting 100%. If you put whatever stake, 10 contracts, $1,000, whatever amount of money you may have put, at this point you're already risk free, or you could get risk free because your contracts should be hitting roughly about 100% or more. So theoretically, you take some off here risk free. Like I said, into the 2.5, you could usually trim or take some contracts, and then into the 4 is generally when you want to get out. And again, it's not going to be exactly to the 4. If you're waiting until it hits 4, you're going to be too late. This is just a window. You have a time window. Again, it's generally before you come into the 4, but you have a pretty close range. So if you would have taken full profits, again, into the 4 window, you would have got out with over, even Ginger. I think Ginger hit 260, 280% or something like that. And again, trim here for 100%, get risk free. And then before you hit that 4, you would take out the rest for that 260%. So you're asking me how you would do it in a real-time day trade, scalp, something like that. Like I said, I didn't draw this on Friday and you were here and you saw this trade play out. But you're seeing, if I really wanted to put it on the chart, it would have given us exactly this that you're seeing here. So just because I don't use it, because I'm kind of eyeballing things and I kind of already know how to project stuff, doesn't mean you can't use it yourself. So if you're not good at timing moves and seeing stuff and calculating and all that just based off looking at the charts with your eyes, then that's where this tool would be useful for you. But again, I didn't have it on my chart, and you see how this kind of lines up. Well, not kind of, it lines up just as I explained it. And like I said, if I wanted to take the full range on AMD, then I'll just do the same exact thing, but on this entire range, as opposed to focusing, just that daily move we had. Which you could do, you could put your fibs from here to the highs, and I'm not going to do it just because it's a little messy on AMD. I will cover it this week, and I'm probably not going to trade it just because it's too expensive. But we'll see. Does that make sense? Whether it's on a daily time frame or a swing, like I said, it's the same exact concept, same exact theory. You apply it on your charts the same exact way. Just like I said, it's just a bigger time frame.
Okay, makes sense. Yeah.
What about you, Adam? I don't know if you can have your mic. That's cool. Just let me know in the chat. You kind of keeping up, making sense, not making sense. You got questions?
You hear me?
Yeah, I hear you, bro.
Yeah, I've been in and out listening.
Nice.
I am playing in a volleyball tournament today, so I'm driving over there right now.
Oh, you be playing too, bro?
Yeah, I be playing too, bro.
Oh, that's tight. That's tight.
I was gonna ask you. I'm pretty sure you recorded everything, but
damn, bro, low key, I forgot. Nah, I'm just playing. Nah, I'm playing, bro. Yeah, I recorded.
But I think what you went over today, I'll check it. I'm gonna be able to watch all of it tonight. If you can upload it tonight, that'll be awesome.
No, yeah, I'll upload it right now, right after the call, so you guys can watch it whenever you want. But
Yeah, bro.
it's a pretty simple concept, really. It's just like I said, apply it to whatever time frame you really want to trade, and it's kind of straightforward.
Yeah, that's the biggest question I had was when you use the fib tool, but you already answered the question. But yeah, if you use the fib tool, you use it on whatever point you're kind of trading. So if it's like a day trade, you're probably going to do it on like maybe the 3 hour or the 45 minute candle, right?
For like that AMD example I just went over, all I did was use the high and low of the daily range on the 3 minute. But again, it was the high and low of the daily range, so it doesn't really matter if it would have been, you know, a 3 hour or a 45, because I just did the daily range. So if you want to focus a daily range, like in this example, that's fine for a scalp, which is essentially all the OTE tool is, which I don't know if you know what indicator that is.
Yeah, I've seen your video on it. I couldn't find it on indicators when I looked on TradingView, but that's something I was gonna ask you is if like what was the actual name on the
Because that one's
indicator?
always on my charts, and like I said, that's the same exact thing. Unless they, I don't think they would have deleted it. I have it. Oh, hold on.
And that's the one that automatically places the fib, right?
Yeah, the daily Fibonacci's every day, so it's like I don't have to worry about doing that daily. This one, yeah, it's called OTE. How can I send this to you? I think I could do it here. Yeah. Add to favorites. About this script. Here we go. So look, daily automatic optimal trading entries. That's what OTE stands for. Optimal trading entry. All optimal trade entry is just wait for it to come into GP and then take the shift. So this is your GP, right? They don't use GP. For GP, I like looking at the 618 to the 786. They have a much tighter range, which in a way it's a little better, but at the same time I feel like you kind of miss some trades because sometimes we'll come into the 618 and revert. So if you're hoping on that 786 and don't get it, you're going to miss a lot of entries. But ideally you would wait for, you know, to come into that GP and then optimal trade entry. That's all that is. OTE, optimal trade entry. So take GP, shift back above OTE. Your trade entry for this specific setup that you're showing you here could be a bullish shift higher, and you would target these highs. But again, this is an indicator. I'll send it in the Discord. But yeah, this is it. And again, this is just Fibonacci's on the chart using the daily range, which is what I did for that AMD example. So if you're looking at a day trade, have this on your charts, which is what I have. It makes your life way easier. And then you don't have to throw Fibonacci's on the dailies for day trading on every single thing. And then I have the other fibs on the 45, which you know about. And other than that, like I said, if you're focused on a bigger range like the gold one I discussed, you would do that on 2 months or whatever. But for daily, anything like a day trade, this is more than enough. You don't need to, you know, kill yourself overworking. This does the work for you.
For sure. Thanks.
Let me copy this. How can I send this? Oh, right here. Cool. Do you have this one already? I think you do, right, Robert?
Yeah, I have it.
Do you know how to use it? Do you use it yourself? Because honestly, it's really good.
So and so. I mean, I know I could use a refresher on
Okay.
it. Yeah, I know that it gives Fibonacci and yeah, how to do it, but sometimes I hide it because it, you know, I see cleaner chart.
So for example, here you have, I'm gonna have to hide the drawings. Okay, so for example, again, like I said, why did this not hide? OTE, again, all it is high and low of the previous daily range, right? So this is Thursday, which I don't have. Where is that indicator at? There we go. So this is Thursday, right? Thursday pre-market coming into Thursday. This is Thursday trading session. then this is Friday. So again, OTE, you have your high of Thursday, you have your low of Thursday, which came into the close, right? That's where this low comes from and this high. So far, so good?
Yeah.
Okay,
Yes, sir.
if I want to do a Fibonacci retracement, again, what am I going to do? Go to the high, go to the low. So again, it's the same exact thing as if I did it by hand. I'm just saving myself the time and work. If I'm looking at 30 plus names a day, I don't want to have to do that on 30 different names. So you come into it, again, you have your high, you have your low, you have your range. Based off of this low and this high, here is your golden pocket. 75 and 79. If you really wanted to change the colors to whatever you want, you can. If you think, hey, I'll know mentally if we come into red, that's my entry, or green or purple or pink or whatever color you want, you can change the colors. I just have it set to this, but again, you can change it whatever, but the values are the ones that are important. Again, I take my entries into the GP, which is 618 to 786. This specific indicator is going to show you the 0.75 to the 0.79, which is essentially the 0.786. It gives you a tight, small range around that 786. So again, I like this. It's a little cleaner because it gives you a much tighter range to work with, which is going to give you better entries. So let's say the 618 is like right here, right? You're getting better entries as opposed to taking it down here. The only problem is you're not always going to get that. In this specific example, you can see we got rejected right into that zone and fell lower, right? But again, if you look at the next range, so again, this is one range. This is one range from high to low, and these are your Fibonacci extensions of that range. And then from here, you're going to have to the downside your retracements. You see how the retracement to the 75 is right here? And that's literally where they bounced. Do you see the 75 right here?
Yeah.
And then from there, they bounced it all the way back to the 1 above the previous daily low, and they pushed above the 0.25, which isn't a significant reversal zone. But the one thing they did do is sweep the previous daily low. But they bounced off of GP. So again, GP up here, GP down here, all based off of this one indicator. You have, again, extensions and retracements, which is the same exact thing I'm showing you guys with this tool. So like I said, if you're looking at a bigger range, like a 2-month range or something where you want to take a swing trade or something like that, most definitely go ahead, chart it out, do the work, put these on yourself. But if you're just looking for a day trade, like I said, you have extensions and retracements within this one indicator. So why are you going to do all that work? It's not like it's so much work, literally takes you a few seconds. But like I said, when I'm looking at so many different names like I do with you guys, by myself, etc., no need to, do that on 30 different names that I'm probably not even going to trade. I'm just going to look at maybe once or twice. So again, that indicator is just to save you time. If you want to do it by hand to practice, that's fine. But again, all you want to focus on is your GPs, or on this indicator, your 79 and 75. Then down here on the extension, 75. Generally, you're not going to see moves past the 100s. Anything you see ever over 100 is overextended move. 110%. Anything that moves past this is overextended. So not saying it can't happen, because it can definitely happen, but it shouldn't. So for example here, let's say AMD breaks down below that below that 100 level and just waterfalls to 200 or something. Like I said, definitely possible, just not generally gonna happen that we get out of these daily ranges. So if you have let's say puts or calls or any bets within this range, just be mindful within the outer extremities of the range. You want to consider taking profits. So this is your range, daily range, daily range. You want to be trading within ranges. Anything outside of the ranges, like I said, can't mean it can't happen. Like last Friday on SPY, which my chart is getting so messy. I'm cleaning this up today, but where is it? Right here. Last Friday, this was ridiculous. This took out many ranges. So a daily range on this, for example, was this here. You have your high and you have your low. I don't want this to extend.
So it looks like it possibly was in GP, and then you would have put your put.
Yep. So you see exactly at the low of this is the 100. So imagine you thought, okay, fuck it, I'm gonna take,
False.
and it did bounce literally. So it came down, bounced up to here, and then this is where the new candle opened, and where the new candle opened, it just waterfalled way down to here, and then it did the same thing again from here. It bounced way up here, so you people get hopeful, and then again do the same thing way down here. So realistically, again, shouldn't see moves outside of that 100% range extremity. But again, on a day like this, look at how many ranges we did. 2 ranges, 3 ranges, 4 ranges, 5 ranges. So I'm telling you, that move on Friday was absolutely insane. Not even I could have expected that. But when you come into an area like we are here, like I said, this sell is a lot more uniform, a lot more predictable, and everything. This was just, you know, pretty absurd. So we'll see how this unfolds. But again, generally you want to trade within those ranges. Don't get upset if you're like, oh, well, I sold into the outer range and, you know, something like this happens. That'll happen, you know, 1 out of 10 days or once in a blue moon. Realistically, majority of the days you're gonna get you know, bounces within those levels. I'm probably gonna do the entire market recap and post it later on today once the futures open and everything, just to kind of see where we're at. But as far as that lesson goes, do you guys have any questions about it, or do you guys want to discuss anything right now while I have you guys? If not, like I said, I'll do the entire market recap later today.
No, I'm okay.
I'm good, brother. Thank you.
Okay, so for now, if you guys want to look at something, you know, just to pass time, obviously not, it's a weekend, but Bitcoin is going to be obviously an indicator here, like I said, rolling over and putting in new lows going forward. And if this does start dipping from here, potentially I would not be surprised to see futures open a little lower later today, but we'll see. All right, then, if that's it, I'll catch you guys. I'll be uploading this video literally right after the call. So maybe within 15-30 minutes, it'll be uploaded for you guys to watch. And then I'm also going to upload while I'm here all the recordings from the past 2 weeks, just because I haven't uploaded them. So I'll upload all that in case you guys want to watch. And then I'll do the other video once futures open later today.
Thank you.
All right, then. I'll see you guys. Take care.
For sure, bro. Thanks.